Crypto spring is here, and we're going to be breaking down a lot of news within the Clarity markup and what is expected. Let's get into it today. I do want to thank our sponsor. That is BTCC, where you guys can get a 10% bonus for first-time deposits. And right now is the time to be looking at trades. So jump over to BTCC right there. You can use our link. It's going to get you some additional benefits, including extra bonuses, lower fees, all kinds of goodies. So use the link down below. It does help the channel. I want to lead off with a clip, and this clip will get us into a little bit of where Patrick Witt thinks all of this is going to happen. Take a look.
We're going to advance this bill out of the Senate Banking Committee this month. We're going to get it on the Senate floor. We have 4 working weeks, I believe, in June. In the Senate, we'll be able to advance that legislation, get a floor vote, and then provide enough time for the House to pass it. We're targeting July 4th. I think that would be a tremendous birthday present for America, celebrating our 250th.
Eleanor broke some news this morning. The Senate Banking Committee is preparing to notice a markup for the Clarity Act as soon as tomorrow. That would be Friday, going into the weekend, and has circulated a draft legislative text to select industry members ahead of the potential Thursday vote. According to multiple industry sources, we have seen the text. So this could be interesting because generally the language, and this is something we've been talking about for a little while, is that everything's still kind of in flux. It is still being finalized. We even saw the banks kind of reach out and push back. I kind of thought maybe they saw our video on Monday when we started breaking this down. But I think we're going to continue to see a little bit more flexibility. However, I do think that some of these senators are probably done in trying to get this done. One source told her the overall vibes after reviewing the bill and coordinating with other industry leaders are positive so far. So even though some have kind of bracketed some sections raising concerns, key provisions previously thought to be settled. This is the problem that you face around this stage right now. The poll, though, that came in from Harris, and if you guys don't know, the Harris poll does all sorts of political polls. Witt kind of calls attention to it and kind of see right here, 52% in terms of support for the Clarity Act crossing party lines, 52% support, only 11% opposed. So people are liking this, which means the voters that are going to be out there voting for supporting the Clarity Act also is politically advantageous. Another one that kind of shows only 22% said that it would strengthen it. This is talking about national security. It's the most powerful frame. So everybody says digital payment systems built and controlled outside the U.S. would weaken national security. This is the issue I think that a lot of these senators are facing and House members are facing right now, is that if they don't get this done, all of this moves offshore and they get blamed for it. So I would agree that is a big one right here. Also, the Americans want U.S. leading the future of digital finance. You can kind of see it. U.S. voters want the leadership and clear rules. 70% said they would do it. 62% extremely or very important. And 60% prefer clear federal regulations. So everybody's all in on this. That is a big signal to a lot of the lawmakers that simply says, guys, get it done or you're going to get voted out. Now, this is interesting because Mike Belshey hit on something that was interesting, and that is, where are people coming from in terms of institutional capital and what are they waiting? He mentioned the word trillions, as you kind of see there from Patrick Witt, but it really was boiled down to one simple quote, and it was this right here. We want to see the stamp of approval. He's talking about Clarity. That's the go button, and I think everybody is waiting on that right now. Other ex post out right here, this, of course, is Senator Gillibrand. She's hitting on a couple of things here that are very interesting before negotiation, before markup. Consumer protections, we don't know what that looks like. Illicit finance and terrorism financing safeguards, meaning making sure that DeFi doesn't get exploited. Ethics provisions for government officials, you know what that means. That's going after the Trump family. So there's still some things yet to be worked out. I did an interview yesterday at the Solana Accelerate event with Miller from the Solana Policy Institute. He kind of hit on some of those things. I was surprised at what he told me around how that last issue around ethics could get resolved. Go watch that video because it was a very interesting discussion of where it went. We've got it on the show right now, or on the channel right now. Patrick also comes in, it's not true, compromise because it doesn't eliminate yield completely. This was in reference to the bank saying that they had won the yield compromise, when in reality, there were some openings within this language that we broke down on our Monday video. And that Monday video, I think, maybe got the attention of some bankers. So I'm kind of sad that I did that video. But now, the fact that banks think that they won is kind of, just silly right now, I think is what Patrick's getting at. And I would agree with that. The other thing I want to hit on right here is BitMine. BitMine, of course, is continuing to move very aggressively toward its ETH holdings. A couple of points I want to highlight. You'll notice Clarity Act signed into law, but the point that I want to get at is right here. This is in reference to Tom Lee. It says, we believe the potential passage or even failure of the Clarity Act confirms the arrival of crypto spring. Now, I can look at this and say, all right, passage, does he believe it's going to pass? I don't necessarily believe that if it doesn't pass, that crypto spring is here. Now, granted, it will create crypto, I think, a crypto storm in general in DC just because of the kind of pressure that's going to be put on all of these politicians. Maybe that's the angle he's talking about. If it doesn't pass, there's going to be such a storm that it's going to continue to push the market as well as policy. We'll see how that goes. Clarity Act signing into law right now, holding at 67%. This looks pretty good right now. Again, I think everybody's a little bit cautious around where this stands because of what could happen between now, next week, and then from next week all the way through to actually getting the bill into law. Other points, you got Trump going out there saying, hey, man, we just keep on trucking here. Stock market hit another all-time high. Jobs are up. 401ks are booming. I don't know how you can argue with that one, but, I'm always worried because this always starts to put a question mark when you see this type of goodness happening in the market right now. The DOJ, though, is probing another $2.6 billion in mystery oil trades linked to Trump. Remember, we've talked about this almost every week. There is a pump and dump, feels like, in the middle of a Friday during market closes when markets are most vulnerable. These kinds of activity, and because it's mostly 24/7 trade, then these kinds of activities really kind of flow into a negative position. I think this is the thing that I am still worried about around the issue of ethics that could get into the way of where this goes. Now, Tom Lee comes in and says, wait a minute, let me explain how big this rally is really going to be. Take a look.
To infinity and beyond, what he's calling now the Buzz Lightyear theory, BLT of AI. The data revolution is going to infinity and beyond. He says he's even more bullish than his original roaring 2020s.
I mean, I think it's something we have to calibrate because I'm actually here at the Milken Conference, and I think one of the recurring themes is that AI for the U.S. is probably adding 2 percentage points to GDP each year for the next 5 years. That's like 6% S&P earnings growth coming from AI productivity. And balancing that is, I know a lot of rational investors that continue to point to this coming shortage of petroleum products. So I think there's enough logical reasons for people to stay cautious, but I think there's now a fundamental argument for why AI is causing earnings growth without inflation. And so that is a good combination for stocks.
So that's his bull run thesis. However, he also drops a video that says there could be a retracement. Now remember, just in that video, he kind of talks a little bit about petroleum, oil in general, and what kind of impact that might have if there is a shortage. Take a look at this clip.
And we had about 10% or so pullback in the S&P. I thought, well, maybe that's Tom's moment. He couldn't get the timing right, because who can? But that was the pullback, and now we're so bulled up on AI that maybe we're going to do just fine for the rest of the year. But you're still looking for a drawdown of 15 to 20%. Is that right?
I am, Scott. I think that 7,300 originally was like an aspirational level, and now that we're here, I think that there still is fuel for a move higher from here. But we do have to confront later this year two things, and maybe it won't affect the markets, but I think it's the trigger for a drawdown. One is, of course, the market will test a new Fed, and this incoming Fed chair has some different theories on the sources of inflation and how to read inflation, and so the market, I believe, will put those views to the test. And of course, the second is that every day that the strait is closed, we know that there's an acute shortage developing of petroleum products. So if price reacts later this year, that's going to test the market. So I do think there's the ingredients for turbulence later, but AI and the scarcity, and the U.S. is the provider of that scarcity, is why I think we can exit 77 or higher. And maybe 2027 is one of the biggest rallies we see in our lifetimes.
Wow, this is a lot to break down because he is talking about the issue of kind of the flow-on effect of what energy is globally. Remember though, and I'll talk about this in a second, you got the Trump-Xi meeting coming too. A lot of that's going to be centered around energy and where that is flowing from. Remember though, the United States is still one of the largest, if not, I think one of the top 3 oil producers in the world. A lot of that has been diverted into U.S. Oil in terms of the stoppage of what we've seen in the Middle East. And even if you look at Saudi and even Qatar and the UAE, who have all started to try to correlate other ways to get and start shipping, I don't know. I'm still questioning whether or not we will see a shortage. If that does happen and there is a market slowdown, then yeah, I could agree with Tom, is that there could be that. I'm more concerned about what we'll see in these hyperscalers and whether that truly has an effect on AI. Because this is all going to boil down to earnings. And that's what's going to drive the market. That would be a question mark, I think, for sure. Other things that come into this, of course, is going to be on jobs. And that, of course, is setting right now. February U.S. employers cut. Remember those dates? That was the largest monthly decline since July. But in March, now they're increasing by 665 or 55,000. So first of all, guys, understand that these job numbers always get revised. I don't think we've seen one report come out that hasn't been revised, and it's always downward. So if that 65 is real, 655 is real, likelihood is does that get even pushed down? But the fact that it's had that many new ones is surprising to me based on what we've seen around the industry. Now, there is a possibility, because there's been so many cuts, that some of these companies may have thought, oh, wait a minute, we actually have to hire new kinds of people to replace all the people that didn't know what to do with AI, but now, there's a demand for that kind of worker. So maybe that is an opening that is starting to develop. Here is the meeting, though, that matters the most, and that is the Trump-Xi meeting. This will be really talking about AI. They'll be talking about energy, and I think this is a key issue because as this starts to put a lot of pressure, remember, Trump has been putting a lot of pressure on China via energy. China could put a lot of pressure on the U.S. via chips. Chips, of course, we know Taiwan being mostly correlated to that. China always been in a position where they are trying to look at potentially taking control of Taiwan at some point. So a lot of that still in play today. Now here's a clip from Mark Cudmore, and he talks about, is this meeting really bigger than what the jobs narrative is here in the U.S.? Take a look.
So I think Xi-Trump is bigger than the data that's coming out. And then you've also got the conflict itself. Now, the base case from markets is that there's incentives from both sides, both Iran and the U.S., to keep some kind of ceasefire negotiations going into that Trump-Xi summit. It'll be very hard to have that Trump-Xi summit happening amid a major re-escalation in tensions. So that's why people are assuming it'll be positive into the summit. This is an AI-driven rally, but AI are all the most important names, it's the most important theme in markets. So I think AI will continue to drag the market higher, and actually other parts might play catch up in the short term.
How far does it take us?
Again, even from here, more powerful than people expect. It's one of those rallies where everyone's going, it's too far, too fast. I get it, but you need a catalyst to change. So even though it seemed extraordinary from here, it's going to get more rocky, it's going to get more volatile. Because we're seeing such a powerful move, it means that the negative headlines, people leap on them, they get very excited. But ultimately, with the core momentum higher, I think we're going to get some really crazy, superlatives over the next week into that meeting, when then we'll see.
All right, so with that, I think he is right, is that this meeting could be market leading. The other thing that could come out is it could be very explosive too. So I'm assuming though that the sentiment is right and that this will be a good meeting. But listen, time is going to tell. We'll know quickly. And of course, a lot of is going to have to happen within the Middle East to be able to kind of appease some of that. You have some challenges right now that still have not been resolved. So because of that, you've got smart money kind of sitting on the sidelines right now. Smart money is avoiding U.S. stocks. The SPX is printing new highs, yes, but 3 straight weeks of hedge funds have been selling along these all-time highs. So if you're a retail, just be aware of that, guys. If you're in retail and you are looking at this kind of situation, you're just trying to do a FOMO of what's happening with the S&P, just be aware that this is happening right now. The Buffett indicator printed 227%. That's above 200%, like it's playing with fire. So That's why the market, I think, is still ripping, and I would agree with that one for sure. You look at the LinkedIn founder and what he said here, crypto becomes critical in an AI world. And I think that's going to be pretty much a hands down. Doesn't matter where you are. AI is going to be trading faster and better. It was one of the takeaways that I looked at from the conference. And I said, I think most crypto investors are cooked. And the reason is because you're no longer really going to be trading and try to out-trade this kind of agentic marketplace. It's just not going to exist. The other thing I think that is a concern right now in the market is there's going to be a true haves and have-nots sector. I unfortunately feel like the meme coins and to a certain extent, even altcoins will subside in terms of interest level. Now, there will be a handful, not saying that all of them will go away, but I do think there's going to be several thousands of them that will just disappear. If you're looking at trying to outpace this, outmaneuver it in terms of where the AI play, I think you just go to the L1s. That's where all of this is going to reside anyway. So those are the safer bets in most cases. And those are the ones that are going to be trading along TradFi. They're going to be the ones that really start to get market dominance and distribution. And also the idea that everybody's after, and that, of course, is adoption. So keep that in your mind. I put this tweet out. This is I think the reason for Coinbase's layoffs is that the tide is shifting. You look at Morgan Stanley's strategy here. They basically went head on with one of their biggest players out there, and that are competitors, which is Schwab's, which is a fight for that low fee. They were trading at 75 bips. Now Morgan Stanley trading at 50 as they start to add crypto trading. This is going to get even more heated. So imagine this in other traditional finance sectors that are going to continue to put pressure on what we know, and that is, of course, the crypto exchanges having to get, what it boils down to is this clip right here, and CZ kind of breaks it down.
Even if one player doesn't lower their fees, the other players will. And the player who doesn't lower their fees will lose market share. So you can keep your high fees, but then you won't have any business. So I think they are recognizing that. And that's going to be another factor that they actually have to be a race to adopt this new technology, which lowers their costs.
Pure plays are more often the winners because they're not encumbered by two ecosystems, the TradFi in this case and DeFi. This idea of if you don't get with the program, you're going to lose, it's going to happen in a shorter period of time than it has historically, right?
Absolutely. The rate of change is increasing and the response time is shortening. Even though this CEO may think he have 2 years, he might get fired in a year if he doesn't use AI, doesn't use blockchain. So we'll see.
All right, so CZ hitting on the point is that everybody's racing for better fees there. And I don't know that I agree with Kathy on that because I think that's happening right now, TradFi, DeFi, crypto, traditional finance, I think this is starting to blur the lines. Granted, it is still a long ways from getting there, but I think the speed in which it will happen once clarity comes into play, it could be reality where you won't be calling it crypto anymore. It'll just be, kind of next generation finance. That's all that we'll be talking about. The other thing that's hitting right now is that there's two big features that are happening at the same time. One, of course, you have clarity over here boiling in, trying to drill down in terms of the language, but you also have what's happening over at the US OCC, which is the OCC. Faryar breaks it down here from Coinbase. He says, we submitted our response to the US OCC's proposed rule for permitted payment stable coins. This is the issue that is tracking along the OCC, who is in charge of implementing policy, and what's being marked up, which is where the industry is. So you got two potential issues here. Think of it this way. The banks are still trying to get policy written through the OCC. If they don't like it, then they would put pressure over here on the language going into clarity. So this is a two-fronted war right now, one with the policy side, the other with the regulatory front that's going through the Senate right now, hopefully into markup. So you can kind of see, and that is this right here. The OCC should not limit white label stablecoins or prohibit multi-issuance models. Limiting or prohibiting legitimate business models would stifle competition and innovation. And this is a thing that I think we are going to be dealing with. Now, remember, all of this is being driven off of the Genius Act. This is where this policy is being constructed right now. The Clarity Act, which is going through, will eventually complement all of this. So you can see, it's almost like you get a pregame happening over the OCC with the banks before you go to the real game, which is getting clarity through the Senate. So a lot happening, guys. White House official Patrick Witt says Bitcoin strategic reserve announcement is coming in weeks. This has been a promise for a while. I'll wait and see. Wall Street firms now are hiring for dozens of crypto jobs. This, of course, you can kind of see. Everybody's out there hiring. You got JP Morgan, Morgan Stanley, BlackRock, Bank of America, Citigroup, Fidelity, Jeffrey. Listen, guys, they have arrived. They understand the game is here, and they're going to be a big part of it. Guys, the fate of crypto is literally happening right now. We are talking about the 10 most important days, maybe, in all of crypto history as it starts to meet the deadline going into the Senate. And a lot of this is going to be going back and forth, so stay tuned right here. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.